2019 is slated to be a hot year for high visibility IPOs, from Uber and Lyft to Pinterest and Slack. How should the average investor play these stocks? Joining us now is Kathy Donnelly, co-author of The Lifecycle Trade, How to Win at Trading IPOs and Super Growth Stocks. So Kathy, you've studied how the shares of newly IPO'd companies trade over time. What did you find out? Like, should you get in right away?
Yes, Jen, thank you. We studied 1,679 stocks from January 1st, 1982 to May 1st, 2017. And what we found out is that more than half, 55% of IPOs undercut their day one low in just 3 weeks. And even more than that, 91% of all stocks will undercut their day one low. So there's really no hurry to get into the stock right away.
Now, Kathy, everyone wants to find those super growth stocks, right? Amazon, Netflix, Square. You say, well, if you put $1,000 in Amazon back in 1999, here's how much money you'd have now, right? Everyone does that analysis. What is it that separates these leaders from the pack? I guess on a trading basis, because it kind of sounds like you're saying, well, it's got to break out and have some sort of technical basis for buying it. You can't just say this story is going to be good and hold your nose for 20 years, right?
Yes, that's exactly right. What we identified was that there's life cycle phases that a stock will go through as soon as it starts trading publicly. And Tesla's a great example of that. We dubbed it the life cycle trade in our book. When Tesla first started trading publicly, it did have an initial advance, but like most IPOs, it didn't do much. And then it went into what we call this institutional due diligence phase, where institutions are trying to figure out if this is really the stock I want to buy for the long haul. And then the character changes. A basis tightens up and it gets back to that prior high from when it broke out initially when it IPO'd. And then it breaks out through turbulent zone. And now you've got the institutional advance phase. And there you have that 350% gain you're looking for in a brand new transformative company that's changing how we drive our cars, for example.
Kathy, so let's say Uber does go public as planned. The market embraces it. Why won't the stock be down 50% from the day it IPOs? The losses are going to be massive.
Yeah, I mean, it's possible, but we don't know what's going to happen. You know, it could turn out to be a stock we call a stair stepper, and stair stepper might go up and actually not undercut their lows. We don't know. It could be that 9% that doesn't do that, but not only we won't know until it starts trading publicly, but the good news is we know what can happen and we can be prepared to trade it correctly.
So Kathy, you are actually presenting your findings from your book this weekend at the Chart Summit 2019 in Breckenridge, Colorado. And you're also, I love this, you're going to be part of a women's panel out there. So there are multiple women there. First off, like, I mean, are you like, what, how many of you are there? I love this. What are you guys talking about?
You know, I keep trying to find out how many women are actually in attendance, but they haven't told me. But the bottom line is that this will be videoed, and we do hope to inspire more women to invest. There's been a lot of research. Fidelity has done research. Barclays has done research that women are actually pretty good investors and actually better investors than men. And one of the reasons for that is because our brains are wired for that planning and that judgment. And we like to buy and hold for those long-term gains. And that gives us an edge over men. So we hope to let women know that. And don't let them say, hey, you know, you're already inclined to be good at investing. So that's what we hope to do, is inspire more women to invest.
That is definitely the truth. Kathy Donnelly, go find the other ladies there. I know there's some. Have a great weekend.
Thank you so much.